morning, Chris.
Good morning. How are you?
I'm good. This is Brian Jones. I'm here with Chris Hood, professional options trader and world's most interesting man.
Not today, my friend. It's cold. I think personality disappears in Canada when the temperature drops below zero. So it's like,
What is it at? How cold is it there?
I think it's minus 8 million. According to my arthritic joints,
Yeah,
it's cold enough to just stay indoors and wear your pajamas.
you've got
It's
that.
horrible.
You've got that older guy sort of, body subjective.
Oh, I don't need the weather network anymore. My wrist joints are far more comfortable in predicting weather than those dudes on TV. It's snowing. I think it's minus 1 or 2, which is not too bad actually. When it gets to sort of minus 30 Celsius, so I don't know what that is in your metrics, in your system that you have there. But
Knowing it's too cold.
yeah, it's flipping cold. There we go. So we just call it flipping cold and get on with it. Yeah, the only thing I don't like about this season is the snow shoveling. So you got to go clear your pathway.
Yeah.
And there's always these neighbors that rat you out to the municipal authorities if you haven't done it, within 24 hours of the snow stopping, then you get fined. So
You get a fine for not clearing your driveway.
you get a fine for not clearing the sidewalk. You've got to clear your portion of the sidewalk, and you've got to put salt on it. There are people that drive around and measure the length of your grass. It's like in summer, if you don't mow your lawn, your neighbors will rat you out to the municipality and they come and give you a fine. And anything above like 6 inches or something apparently breeds mice. I mean, you hear all sorts of crazy things. I just want to know if there's a rule around squirrels taking a dump on your fence, because I didn't know that in North America. I have a family of squirrels that live close to my house, and they run around the wooden fence that separates the lots here. And the one took a dump on my fence. So my fence is flat, and then it's got this like volcanic mound of acorns and shit. And then what happens is the neighbors sort of have this Mexican standoff to see who's going to. Sorry, I've got all these things are going to buzz today. You have this Mexican standoff to see who's going to be the neighbor that goes and cleans the fence, because it sits on the borderline, right? It's either his or mine. I'm just like, no, man, I come from Africa. I gave up looking at animal crap when I came to North America. Now I have to, go clean squirrel rubbish. No, thanks.
You can have BB guns, right? Up there?
No, not here. No, you can't.
You can't even have like BB guns, like the.
No, gee, Brian, you're gonna get me in jail here. No, we can't do many things. No, they can have hunting. You have to have like a hunting license. I would want to throw ninja stars or something. I'd be more interested in throwing like fillet knives. Like that would be more my style. A BB gun,
Shot with a steak knife, yeah.
Yeah, a catapult with some sort of fork, like a trident or something. No, but the squirrels are cute. I have to say, squirrels are cute. Raccoons. We had a family of raccoons once invade our bins, which was quite a thing to watch.
Yeah, they're very intelligent and devious, and they're not very afraid of people.
No, but the skunk. Oh my God, the skunk is the worst. Often you see skunks as roadkill close to where I live. So you roadkill, a kilometer away, and then you're driving down, and you've got to like make sure that your windows are all up, and otherwise the smell gets into your car, and it's horrible. No, Canadian wildlife is pretty. It's pretty much like the markets at the moment.
So what about what do you think we're headed? I know we had a little bit of a pullback, and then
you know what? It's an interesting time because we're in this bullish season, but we've got this news that obviously now we have COVID version 5.1 or whatever it is.
Yeah.
I think there will be an initial knee jerk, which we saw on Friday. That was very much a retail-led sell-off. It wasn't necessarily institutional. And then we saw the bounce back yesterday. And now we're seeing, increases in volatility again this morning. And it's just, I've been communicating this to my clients, is that you've got to trade with the chart in front of you. The news event, some people will be of the opinion that the news event drives the market. I think the news events validates the market. we've known that the market was extended for some time. Therefore, pullbacks, when we have our extension indicator telling us that prices are going to pull back, you know, when it tells us that that's going to happen and then it happens, it's not a surprise. The extent to which it falls back and the levels to where it goes can often surprise people. So what we saw on Friday was a movement far outside the expectation of a normal pullback. It was a little bit extended to the other side, right? So now we've gone from one extreme to the other, and we did that in a day. Usually that would happen in less time. So where you should be as a trader right now is, one, you can't ignore the fact that we're at the end of the year, number one. Number two, you can't ignore the fact that there's news and there's going to be knee-jerk reactions on both sides. So when you have those sort of situations, the idea is to sort of sit back on the side, let those things fall as they are, trade the opportunities in front of you, but trade sensibly. So sizing becomes more important. Duration of contracts needs to be, you know, highly important. You don't want to be trading with expirations in the next 2 weeks, for example. You want to be looking at 3 to 4 months and give yourself the luxury of a little bit of time, because within the next couple of weeks, things will solve themselves. We'll get a lot more data. We'll be a lot clearer. It's not, I don't think we're at the same sort of stage as we were with COVID. I don't think that we're in the same boat. I don't think governments around the world are going to lock everyone up again. I think that they've seen the damage that lockdowns cause, and governments are a bit nervous to do that again. The travel ban, you know, the retail, the tourism sectors and hotels are going to get smacked around a little bit. The cruise lines are going to get hit.
Well, the thing is that I've noticed is, well, you know, when it first came out, it was extremely, nobody knew anything about it, so it was overwhelming. And now it's a little bit, well, yeah, it's a new variant, but you know, it's not that. It's basically going to be, you know, just a little blip in the radar, because it's starting to become like, we're starting to become a little bit hardened to it, I think, you know.
Yeah, desensitized. Yeah, like it's okay. Yeah, not another one. You know, my son asked me this morning how many variants of COVID we have, and I lost count. You know, I don't tend to watch the news. I tend to stay away from groupthink as much as possible. I try and let data drive what I'm doing. Not only because it keeps you sane, it's just I think it's a smarter way to trade. If you're going to try and trade the news event, you're trying to bet on an outcome you can't control, right? It's like, I don't know what's going to happen tomorrow. And I think if anyone tried to do that, it's a fool's game, all right? You're going to be chasing things you can't control. I just don't like trading like that. So I'll look at data more than anything. If the market indicators are telling me momentum is dropping or volume is dropping and prices sitting below resistance and all of that, a very well-informed decision then whether you trade or not, as opposed to, oh my God, I just turned on CNBC and they told me the world's ending. You know, it's the zombie apocalypse. You know, would you trade under those conditions? Probably not. You know, the news is not designed to create happy feelings. You know, good news doesn't sell things, right? So the media is obviously going to overblow this. There will be an element of hyperbole that will come into the way in which they will inform us of the dangers of it or whatever. I don't get into the political nature of, you know, the disease and whatever. You know,
right.
You know, I'm not into that. What I'm more into is, if you're a trader, you have to trade in a very calm and rational way. You can't trade emotionally based on fear or on greed. If you trade on those emotions, you will lose either way, right? There's just no doubt about that. So data is really important. You've got to have your synchronization of your data. You've got to look at where there's correlations and where there's no correlation. You can't, it's a tough thing for a lot of retail traders, right? Where you have multiple indicators that often give conflicting signals. How do you interpret conflict between signals? Which one is more important than another? Those are all things that come through experience. You'll often find that people who trade on single indicator strategies tend to do worse because they're not getting confirmations from other signals. I mean, I'm a big believer in multi-signal strategies where you've got confirmations coming from different sources. Conclusion, you'll end up having a better quality decision without the emotion that comes with it. You've seen the tools that we've been building, where, just a simple change in how, in which moving average, for example, you use on a particular stock can determine profit or loss. As opposed to, I'm using a moving average crossover. At the end of the day, which one and on what time frame, and which moving average are you using? Those all make a difference. So as you get more experience as a retail trader, you have to start thinking a little differently from how the books and the chat groups and all of that is sort of teaching you. I'm not a big fan of collective groupthink, because when you sit in a group of maybe 10,000 people on a Discord server, you have no idea who these people are. You don't know their level of experience. You don't know what tools they're using. You don't know what their ulterior motive might be for putting something on there. It could be a pump and dump, whatever it is. You just got to be avoiding that. So I stay out of that. At the end of the day, if my process will bring to the top trades that I like, and whether people like it or not, that's the way that I do it. It's worked for me for years. I'm going to keep doing it. I'm not going to run into a room and get FOMO because someone else is doing something that I might not agree with. So it's a tough time. This is not easy.
What do you think about the biotech, the biotech companies like Moderna? They seem to be getting a little bit of a boost with people potentially trying to work on another vaccine. There was a couple.
Yeah, let's have a look at Moderna. Let me share my screen.
I got a buy signal from it. I missed the buy signal actually because I just was working with a tool that you have, your strategic pack.
Yeah.
And, it was a couple of days ago on a really relatively profitable setup.
Let's have a look at it. So on Moderna, let's put it on the day chart. We're going to open up the tool and let's play with this and see what we get, right? So using the day chart, using a 813 cross estimate, we're using our slingshot entry. What we can see over the last 2 years, all right, or 3 years, this trade setup has been very, very profitable. It only generated 54 signals. So this is a little concerning, but actually at the end of the day, it's not that bad considering the sector in which Moderna operates, right? So what we're looking for here, we've got quite a long ATR that we're using to trail the option position. We would be using, if you look at the average duration of a trade at 11 days, that's a pretty reasonable trade. So here's your entry signal that we would have got. We've gone long in Moderna here. We've got a volume breakout. We've got an improvement in volatility. We know, well, in the ADX, we know that momentum is shifting to the upside. We can see our B score is also rising and our squeeze is also firing to the upside here. Well, we had no squeeze. Momentum is moving to the upside. So Moderna looks like a really interesting trade to go in on this basis. If we just adjust this a little bit, let's just change our signals. So if we're looking to do something maybe more frequent, we want to trade a little bit more. So here we've 87 trades over the last 3 years with an average of 9 days per trade. Using the 4-hour chart as the indicator, we still have an entry signal that happened back on the 18th. So about 2 weeks ago, we had a buy entry signal, and we have a secondary entry signal over here yesterday. So if we take that off, these green columns will disappear. So this is our secondary adding formula that we use, so we can build the position as we want. That was a very profitable trade setup that's worked very well over the last 3 years. And Moderna is a different case though, because if you think about it, over the last 3 years, Moderna has benefited greatly from COVID, obviously. So if we take this back and we look at something else, for example, let's pick a different stock. Let's pick Twitter. Twitter was in the news yesterday. Let's see what's happened with Twitter. Using exactly the same setup on Twitter, right? So we're using the same moving average and everything. We can see a much less profitable trade. All right, much less profitable. So it's really important sometimes, and we don't have a trade signal here using that strategy. So what we would do is we would go in and we would look for the strategy that we need to follow. If we wanted to do a trade on Twitter, we would then be, okay, that's not really what we would be looking for. Let's look at the 189 minute. And this will tell us the historical probability of that setup, right? So as a trader, what you want to know is, where am I entering now? How am I going to manage the trade going forward? And has that trade setup actually worked? Because if you just apply the normal, well, I'm going to buy on every dip, and I'm going to enter on the same way on every trade, and I'm going to have the same ATR on every single, setup, you might not win. And then when you lose, you're going to look at it and go, oh, that was bad luck. It was just one of those losers. But if you'd taken that same strategy and gone to another stock, you might have had a completely different experience. So, nothing really there on Twitter. So it's just an interesting concept, because a lot of people follow the same strategies, right? And with the market being a zero-sum game, if everyone followed the same thing, how many people are going to win and how many people are going to lose? If you're all doing the same thing, there is no trader's edge on that basis, right? You have to do things a little differently. So, looking at the market and how you interpret the market and how you interpret the data and what type of signals you take and where you get them and how you get them is going to make a big difference, right? So if you go into any of these, free sites, even TradingView, right, you can see that 73,000 people are using the same indicator. You know that 73,000 people are all going to be doing the same thing. How are you going to make money in an environment where everyone's doing the same thing? Because not everyone can make money in that world. So this tool that we've built is something more for traders to help plan their trade going forward. What is your expectation when you go in with an option trade? You should have expectations of duration. You should have expectations of probability. You should have expectations of profit. You should have expectations of where you're going to be adding to your position. And without the tool to tell you, it's all going to be random. And then when it comes down to the end of the year, when you're looking at, well, what are the most successful trades you're going to be having going forward? How are you going to assess the difference between certain stocks, right? So this is something that we built. It's very powerful, very, very powerful when used correctly.
I've been working with it a little bit to get try to save some setups that seem to work well. So I haven't gotten to go in on one of the setups yet, but I'm going to.
Yeah, so let's look at the futures here on the day chart. Let's look at the futures on a slightly shorter time frame. Let's look at the 10-minute chart on the ES futures. You could see our reversal signals already signaling an entry. We had two already this morning. We had an ATR entry. We had a reversal on momentum and a reversal on the candlestick. It's trading in these demand zones, which is really important. So we want to see it break out above this. We want to see it moving up into this area here today. We've got a breakout of volume. So there was a lot of volume that was going through at around 10 to 9. We see a change in direction. We've got a squeeze firing to the upside. And our B score is above 50. So on the 10-minute chart, we've got some positivity here on the trade. Let's look at a 10-minute trade. So using this same tool on an intraday basis, what's the setup that's worked the most on ES futures, trading the 10-minute chart, right? So let's have a look at it over the last year. So we're going to just change the data a little bit. We're going to add this all together and see whether a 10-minute chart using the 813 SMA has actually worked here on futures. It takes a little bit of time to calculate. So here, not a very good setup to use trading on the futures. If we use the EMA as a calculator, or to calculate our trade, let's see how many this brings out. Also, not very successful using the 813 on the 10 and 10. If we used the 5-minute chart on the 5-minute chart for the indicator, but we trigger the entry on the 10-minute chart using the 813, let's have a look and see whether or not this would have been a profitable trade. Nope, not very profitable at all. We click again on the SMA. So you see the difference. It's like you can actually start working out. You can start seeing which are the trade setups that are going to make the biggest sense for that ticker. So you don't land up just taking a generic approach and then hoping for the best. So I'm just going to manipulate this a little bit to find the settings that will work. And then once you find a setup that gives you the profit ratio that you're looking for, the sort of risk factors that you're looking for, all of those, you're going to be finding a solution. And then once you've got that solution in place, then you follow it. That's going to be your trigger set for that ticker. So
have you noticed that? Have you noticed a particular type of stock that works? Any patterns that for SMA versus EMA versus HMA?
Not really. I think with the HMA, the way in which it calculates and it negates the effects of gaps up.
That's the whole moving average, is that right?
The whole moving average, because of the way it calculates, you're going to get, it's going to give you a lot more signals than an EMA or an SMA. So number one, right? So if you combine the speed at which the hull generates a signal together with fast time frames like intraday charts, at best you have a robot to do it, because you will miss the trades as a human. It's not going to work, right? So I tend to avoid it. It's just because I don't have the time to hit the trade as hard as, or as frequently and as accurately as I should, because I've got other things that I'm doing. What I have noticed though is if you start looking at, here's some of the trade setups that I like. So this is TQQQ. This is trading this trade setup that we've got here, fairly profitable, 83 trades in the last year, I think it is, that we've got up here. This is over the last year, so this would have been fairly profitable. This is trading the 2-hour time frame for the indicator on the 30-minute chart that we're going to be applying the trade. We've got add-in positions as well. We are using a 5% equity position with a max of 3 orders, and that came out relatively profitable over the year, right? So if this was a robotic trade, we would have been in the trade now, right? So there was our buy entry. That was at 12:30 on Friday. We got a buy entry signal, and we are still long in this trade. Here is, this is SPXL. So this is the triple leverage ETF for the S&P 500. We got an exit signal yesterday, right? There was our exit signal. We have an entry signal this morning with the price going up in the pre-market above our ATR trailing stop. So you've got 2 signals that happen here. One of them is based on the strategy. One of them is based on volatility. So depending on how you're going to be approaching your plan, you might be sitting back going, okay, well, on the ATR move on the upside, I'm going to go in with a small position. When the ATR, when you close above the ATR on the day chart, you have to look at whether or not you need insurance. You want to be creating a married put. Would you be adding a secondary trade? All of those things would be built in. This signal has been very, very profitable this year. 2.8 profit factor, 50% win rate. And this is another thing that makes it really important, is you've got to look at the max amount of your drawdown. And you also need to recognize that your win rate is not as important as your profit factor. Too many retail traders look at win rate, but not profit factor. You could have a 90% win rate here and still lose money. All right. If your profit factor is negative and you've got 100% win rate, you've lost money. All right. Your profit factor should always be the driver. And what that emphasizes is your ability to take the signal to get out. It's not the ability to take the signal when you take profits. It's the other way. So this is most affected by your inability to follow your plan. So you can have a retail trader go, oh, I'm really good. I've got an 80% win rate. But if your profit factor is 0.99, you lost money. Because you lost more when you lost. You lost more than your average win when you were losing, right? So that's the problem. So a lot of traders don't focus on managing their losses. They only look for the upside win, which forces them to watch the wrong data. So if you're a retail trader out there and you're not following this number, I suggest that you should have a look at it and start tracking it. And it's just purely a matter of number of average wins. So your average win number divided by the average value of the win. All right. So if you had 10 wins and you made $1,000, your average win was 100. If you had 5 losses and your average loss was $300, you lost more, but your win rate was still high, right? Your win rate was high because you won 10, lost 5, but you lost $300 every time you lost, and you lost, or you made 100 every time you won. So you're not going to make much money in that. And this also drives you down into the point of risk reward. So if you're doing a credit spread, for example, and you're risking 10 times your potential win on a trade, right? So let's imagine you did a $5,000 trade on risk for $500 and your win rate was 90%, right? So you won 9 out of 10 trades and you made $4,500. You won 9 trades out of 10 at $500, but you lost one at 100%. You lost money. You had a win rate of 90%, but you lost $500 at the end of the day.
Oh, that would be terrible.
Yeah, so this is why risk reward on your setup is so much more important, because if you know from your data that your track record is pretty sketchy in getting out of bad trades quick enough, you might be over risking on a trade sufficiently enough to wipe out all the profits that you've had before and take a winning strategy and turn it into a losing strategy, even though your win rate was high. And that's what we see a lot with traders that have single strategy focus. So traders that use one strategy only, particularly people who sell naked puts, that's the big problem. And then a lot of times naked put sellers use, sometimes flawed logic around justifying being assigned on shitty trades. Excuse my French. They get assigned these rubbish stocks and then they say, oh, well, I'll just sell call options and wait for it to be assigned on the call option. The problem that comes in is that if that stock doesn't recover, and we've seen it many times where stocks don't recover, you might be holding onto a pile of garbage, selling in the money calls to generate marginal amounts of premium that if you mismanage that trade and you are assigned where you've sold it at a strike underneath the net cost of the stock, you've now cemented a loss that could wipe out all the profits that you made on other trades. So planning, knowing your numbers, absolutely critical. If you want to be a successful trader, you need to focus on the numbers that count. So this is just one tool that will help you here with SPXL. Here's SPX. So this is the index. This is an intraday trade setup using the hourly chart. It did 388 trades already this year, this signal. Very, very high profit factor, reasonable profit win rate, 388 trades. This one generated, what was the setup that we had here? This is a 5% position, managing 2 additional trades on the add in. And that generated some pretty nice profit over the last 2 years. This was a 2-year one. So if we look just at this year, 2021, we'll see how successful it's been this year. And obviously with win rates, back testing, it's always important to back test it over the longest period possible. Don't back test it just for this month or just for last year. Back test it for a long time to get a broader view on whether that setup works. You can see here, just looking at this year already, 128 trades. The drawdown number here is fairly high relative to the profit that you're taking. So on this, you might want to adjust your risk factors down. You might want to play this up, hold on for a little bit longer, make a 5 times multiple. And here you'll see the numbers start to adjust. So the tool is really useful just to help you plan, get some probabilities, into your accounts. If you look at the 4 strategies here, we have 21,000. Here's another 21,000. That's 40,000. Here we have 17. So that's 60,000. And here we have another 82, right? So this is off SOXL. This is the semiconductors. That's $200,000 in trades across 4 stocks using small amounts of capital, but following signals, right? It's all about building the discipline in following the signal. You don't have the same strategy in all 4 boxes. It's all different because you're finding the best thing that works for that stock. You put it on your page. Literally, this is the page that I watch each day, all day. I just wait for the signals to appear and then you go off and do the trades.
So you just use the, you set the alerts for whenever that stops.
This thing is really nice. You set the alert, let it come in. And then when the alert comes up, you go in, check the chart. And if the secondary signals are all working, all right, so if we go here and say we got an alert on SPXL and the alert was for, let's say the 189-minute chart. I mean, I'm just randomly going here. What we would do is we would look at the chart and then we'd look at the below chart indicators and we see, okay, our wave scores dropped. It's now below 50. We've got a zero compression squeeze. We've got a buy entry here on our signal. So we can enter the strategy here, and we know that the strategy is not very profitable. So we're not going to do that trade. We would obviously need this to be the same conditions of the alert that we had. We would look for our trade strategy. I'm just going to put something in here to give it a better signal. All right, and we are looking at the 189. We're going to use, let's just use the 189-minute chart, and you'll see how the signal starts to come up, right? You're building the trade. So there's no trade here for us on that basis. Let's add the slingshot, see if this works. So here, not very profitable using that trade. And again, you would build this, create the see the setup that you have, create the alert. When the alert comes in, you do the trade. There's no, should I not, that kind of
your
thing.
homework for setups after the market closes, and then
yes,
find the trades, the trade setups, and then set everything, and then just follow it when it happens.
Absolutely. Here's a good example. Here, a win rate of 50%. So someone might be really excited. Yeah, I won 50%, but your profit factor was below 1, so you lost money. So you did 31 trades and you didn't make anything. So that makes no sense, right? So why would you trade this strategy, the 1321 189-minute on the 189-minute chart using the EMA? Doesn't make any money. So it's pointless to do the work, because you would have had fees and everything going into the 20 trades. So sometimes knowing what not to do can help you significantly to avoid things that are not going to work. It's just, there's no way this will work. Very low probability. If we extend it over time, let's see what happens if we add an extra year to our back test and see if it worked. Now it's a little bit more profitable over that period of time. So are you going to follow this trade strategy for the next 2 years? That's what you've got to think about. Could you find 37 better trades somewhere else? Probably. There's probably better setups out there and better timeframes to analyze. And, there's better setups on SPXL. This is looking a little bit better. Now we can start playing around a bit and seeing whether or not there are really good setups that we can play. And then what I've done, what my clients get is, every time we find new setups. So here's a setup you and I were doing together from 2018 to today on XLC. This is the sort of thing you're looking for, are these high profitability, high profit factor trades that don't happen very often. All right. When they happen, you need to know it's a high quality setup and that you size appropriately going into that trade. So you would size this trade significantly different from a trade that's just some random thing that you're going to be adding on. Let's have a look at that. So we got an alert on Tesla. Let's see. So Tesla, we have a reversal signal that's now triggered yesterday. Let's add this onto the day chart. Let's see where Tesla's going to be. Tesla's going to open up. We've got quite a few trades on Tesla. Here's the signal. You see this green column is a signal that allows us to enter on that column. If we've already got a buy entry, we've got a add entry trade here. Look at this trade, 54% profitable, 6.6 times profit factor. So this is basically on a EMA 2134 on the 189-minute using the day chart for entry with buy-ins, right? So we're going to be adding to this trade. So from here, we can also add additional trades on our reversal. Look at that, 41.5. So now we're adding even when we have a reversal signal as well. So here you would have had 3 adds. If we go in, modify the setup, let's just add a few more trades. So if Tesla was a priority trade for you, like this is just for this year, right? 2020, 2021. This is the kind of setup you would be looking for. Is here's a trade that was 88% successful, and it never had a drawdown. This is really, really powerful. So your average duration of trade here was 39 days. This is really cool. 9 trades a day, 9 trades a year. Put this in, set it up, let it go. So really nice setup. And it's a good tool to use. If you're a new trader, this is the kind of stuff that you'd be looking for, is to know that the setup that you're approaching has worked before over a long period of time. It gives you confidence. You'll be able to then set your trades appropriately. So reasonably good stuff here.
This definitely, it definitely helps. I mean, I guess you could collect all your own data by winning and losing money over time, or the backtesting thing would, I mean, I know you should collect your data anyway, but backtesting definitely helps.
Sorry, there we go again. Yeah, the thing is, you've got to remember, day trading. In the past, day trading would help you determine the setup that would work for you, right? When I did the numbers on this and worked out the combinations of how many different trade setups you'd have to look at, just looking at the 5 different moving averages and the 19 different time frames and the different ways in which you can add secondary trades and what have you, there's about 40 million combinations. Multiply that by 40 million combinations based on the number of shares that are available that you could analyze, right? So it's a lot. No one has that time frame in order to determine whether or not that setup is going to be profitable or not. No one can do that. So expecting people to do paper trading to work out the setup on the stock, no, it's not going to work. So the simple method that we use is, 1, you have the tool. 2, you have a watch list of shares. So your watch list doesn't have to be huge, right? If your goal is to make money at the end of the day, you only need a couple stocks. You don't need 100, right? So all you would have, I've got a list here of the major stocks that I watch. You click on the stock that you're looking for. You'd look at Apple. You'd see Apple coming up now with signals. Let's have a look and see what Apple's going to come up with here. We've already got Apple trade, so we've already gone into this trade a couple of times. We build our trade on Apple, so let's just take off what we are not doing here. So we're going to be trading Apple on a day chart basis. All right, so let's look at Apple on the day chart. So the first thing that we would look at is, let's look at the trade. So here, I'm pretty comfortable with this. Let's imagine that I'm comfortable with that kind of profit factor. I'm not looking too much over there. All right, this is not what I'm driving. I'm driving here, right? I'm looking for profit factors above 1.3, 1.4. That would be my cutoff. Ideally, I would like a 50% win rate. So let's just manipulate this a little bit and see. So we want to get to a higher probability. So this looks good, right? This looks pretty much in line. It doesn't have a big drawdown, so it's a very reliable signal. This has been going for this year. Let's go back to 2019. Let's have a look and see if this signal has generated a lot of profit before, or is a very successful strategy. So this is very good, right? So 2 years, 70% win rate, 5 times profitable. Okay, so what we do now is we go, I like the look of that. I've got a buy entry signal that is already valid. That exit signal is based on the ATR. And then you see how you can often have these offsets the next day, right? So you don't just enter on the first one. You've got to give it a day. There's your confirmation candle of that exit. It didn't confirm the exit, so you need to stay. You would have stayed in the trade. You'd still be in it. We have momentum to the upside. We have an increase in the volume of the stock, right? We can see an increase in volume here. This is the absolute, this is the change. So we can see a change in volume, an increase in volume. We know that we're not going to get a big drawdown. We know we're only going to get 30 trades over a 3-year period, a 2-year period. Let's have a look and see whether adding to the trade in our plan is actually going to improve our numbers. So we were at 70 and 5.1. Now we've gone to 56 and 3.7, and our volume has increased with our profit dropping down a little bit. So here we've got more trades with a slightly lower profit factor. So I'm probably not going to add extra trades onto this. I'm going to just leave it at 70 and 5.1. So I'm only going to do one trade.
That looks pretty good right there. The 70.
Yeah, so what I would do on this is I would increase the size of my trade, right? So I would just put in a slightly larger trade. So now we've put in a slightly larger trade. The numbers should change a little bit. Yeah, it's fine. Leave it like that. So we know that this setup is a profitable setup. And we know that the average duration in our trade is going to be 17 days, average. So now for someone who's trading Apple, they will go, okay, what I'm looking for is a trade that's going to take advantage of the 17 days. So I want to make sure that my expiration, if I'm doing a debit spread, is far longer than the 17 days. So you would be going into our default strategy. So one thing that I've built into this beta testing model is if you click on this little strategy info button, it will pull up, it will pull up the strategies, right? So here you've got all the different strategies that you can have for, I need to work on the framing of it, right? So essentially what you've got is all your different strategies that you can use for long calls, et cetera, that come in on the side, right? So for any user who is struggling with the strategy, they can just open up that little piece and they can see the strategies that we use to build the trades. So now we've now decided we want to do a trade on Apple. We're going to be using a 90-day call option. You would go off and pick the strike and the delta and the cost that you're looking for, right? And then you would just build the trade, and you would then set an alert. To set an alert here is really easy. You just click on there, click add alert, and you would go, I want to know when there is going to be a change in this indicator. So anytime there's a change on the indicator, signal or otherwise, it will come down and send you an alert. And what you do is you say, this is going to be Apple, and it's going to be signal change. And in here, you would put your order. What are you going to do? Close or add to the trade. Remember to check the lower indicators. So you're telling yourself exactly what you need to do, because when that signal happens, you're going to read it, and it says there, remember to check the lower indicators. Okay, I'm going to go check the lower indicators. So you're always going to remind yourself of what you set up, and then you go to the next trade. The next trade might be Amazon. We look at Amazon. We had an ATR exit signal. We don't have any buy signals yet that we have active on that strategy. And obviously, I've got Amazon positions on different strategies, and you just go through the same process. So each day you rebuild, you've got a sheet that would be your Amazon page. Click on it. Is there a change in the strategy? So for example, just like we have here with these strategies, I don't change it. I just leave it. So this is my day chart. When the signals change, I do the work. I don't do anything unless the signals change. So you can build up, 3 or 4 of these in a row on your tabs and just leave them open, and then it's done. That's your trade management.
Nice.
So it's a really, really cool tool. It's really nice for people who are, planning freaks. I'm a bit of a planning freak. I think it's important in trading. We're not doing random stuff here. We're not going to a casino. So unless you're planning properly, it becomes very, very difficult to make a sort of positive impact on your P&L without these kinds of tools. So
yeah, I really like this. I think this is going to be a really, really valuable thing for any traders that decide to sign up with you for. This is like I said, I've just messed around with it enough to realize how powerful it is.
Yeah.
So I'm going to take some more time and build out some more strategies.
Well, thanks, man. I appreciate it. And one of the things that I've noticed though is there's, I told you guys a couple of weeks ago, I clicked on a couple indicator things, and I've been having conversations near my phone, and Mark Zuckerberg's been picking up things I've been saying. So my Facebook feed is now filled with every single seller of an indicator that can be out there. And one thing that I've noticed is none of them come with any backtesting capability. And so you have to question it. You have to say, well, why wouldn't someone tell you how successful their signal has been? It's because they're not. That's the biggest problem, right? You don't want to tell people that their signal hasn't worked, right? They only really show you where the signals have worked because it's a FOMO-based indicator program. It's like, hey, look at what we've done. You should just follow the signal as it prints. Okay, that's very well and good, but when can I expect that signal to print? Does it print the next candle? What if I'm at the shops and I'm buying something and it prints? And then what do? You can't plan that way, right? So a lot of these indicators as well, when I looked at them, visually, it's very easy to break the math behind it, right? They're not very sophisticated in terms of the calculations that they use. Some of them are just very, very basic. SMA crossovers 813. Okay, everyone's read that book. Everyone knows that that book exists. So there's nothing that's giving you that edge, right? You haven't got the ability with 90% of these things that are out there in the market to adjust it so that on that trade, you can create an edge. So in terms of how these indicators all work together, you know, the one thing that I like in the one that I've built is that when you take a very traditional indicator like the squeeze, right? The squeeze here is a very traditional indicator. It's freely available. It's there. There's a very common way to trade the squeeze. But the thing is, the squeeze often is hard to interpret, right? So you don't have the luxury of being able to just trade it normally. It's not an easy thing to interpret. So here we've built some signals that correspond to how the squeeze is actually firing, so that on the chart, I can actually see that that candle there saw a squeeze firing to the downside. Right, so I can see that it fired to the downside, and what happened to price? Price went down. Then I got a reversal signal here saying buy. So you would have bought on that candle because that's your strategy, right? But it's important to see where these other indicators start to form as well. So what we look at is multiple indicators. I'm a big believer that you need to see the world from different perspectives in order to understand whether or not that trade is going to work. You know, just looking at an MA crossover is not sufficient. It's not going to help you. You know, you may find some luck in it, but there might be things that you're not viewing that are going to cause trouble for your trade. So it's a really important thing to bear in mind.
Well, awesome, Chris. Thank you very much for your wisdom today. No, seriously, it's like this. I just like to sit back and listen. But anyway, guys, head over to Rogue Investing /alpha. Got some new stuff coming out, and Chris's products over there. So I'm going to let you get to your day. Your indicators are going off. You've got stuff to do.
All right, my friend. It's good to talk to you as always. Have a fantastic week ahead. I'll see you next week.
Yep, absolutely, Chris. Take care.
All right. Take care, guys.